Shares of biotech company Insmed continuing to rally after getting FDA approval for its first-in-class drug treating a form of chronic lung disease. I spoke to CEO Will Lewis last night on Fast Money about the drug's blockbuster potential. Here's what he had to say.
When you unlock something like that, the opportunity is enormous. Think about PD-1, think about GLP-1s and the opportunity that they represent. This is the kind of mechanism that I think we've unlocked.
All right, could it be the next GLP-1? Let's ask Jared Holz. He's the research head at Mizuho for healthcare. Jared, great to have you with us.
Thanks, Melissa. Really appreciate it.
I think he was making the comparison that there are many other indications that could be treated, all sorts of inflammatory conditions that could be treated by a DPP-1 inhibitor, which this drug is. Is that a fair comparison to make?
Well, in some respects, this is a little bit of a platform and a product, so that the drug will be approved for bronchiectasis. The estimates around the street are well north of $5 billion. I know that, the biotech team here raised their estimate or their sales projection to north of $7 billion. And then there are a couple other indications that they're working on in the clinic. So this could be, multifactorial in terms of, what the sales look like over the medium to long term. So I'm not sure this is the next GLP-1, but surely I think, the way that the company is thinking is the way that the street has also been kind of viewing it.
The stock is effectively at a 25-year high, Jared. I'm wondering, when you take a look at the biotech sector, it seems like investors are really grasping. They want to find that next story in biotech that is going to be the next GLP-1, and maybe that's why Insmed has gotten so much love, so to speak, year to date, 12 months, you name it. Are there other stories out there that are catching investors' interest like this?
Well, this one's definitely unique. I mean, we know that biotech has been incredibly challenged. When I kind of look at the space in totality, Insmed, argenx, Alnylam, these larger commercial names that have assets or drugs that can be used in multiple indications, this is kind of what investors are looking for. I mean, I think there's a little bit of some takeout potential in Insmed. It's still small enough that it could be purchased. At the same time, we keep on hearing from investors that they wouldn't mind seeing the company go at it alone insofar as the revenue estimates are achievable and potentially beatable. So this is kind of a rarity, but I'd say Alnylam, argenx, and maybe there's a couple others in there, maybe even a Bridge Bio that have the potential to really, satisfy some of those criteria that you were talking about.
At the same time, the sector overall has been absolutely beaten up, whether you look at big cap pharma or biotech, Jared. In times when the markets or when market participants are trying to find value, in times where it looks like interest rates will be lower in the future, this sector gets some love. It gets bid higher. Is that the right way of looking at it, that this sector will only do well when interest rates come down and when value is appreciated in the markets?
It's so tricky. I really have not identified any statistic or metric that is a unique or kind of mutually exclusive driver of biotech. Interest rates, if you kind of exclude the pandemic period, hasn't been as much of a factor as I think the streets talked about. I mean, I do think that there's a little bit of a self-fulfilling situation here where if rates go down, it will kind of invite some other investors to play ball in biotech, but it really hasn't been a huge driver. To me, it's so difficult because each asset here is unique. But the other thing that I think has to be considered is just the underperformance of healthcare in total and how that's been so blown out. You've got this tech sector that's on fire, it seems, every week, and then healthcare is still down year to date. So we're looking at the third year. If the year were to stop now, this would be the third year of consecutive double-digit declines relative. So it wouldn't be bad if we got some sort of sell-off in some of these high flyers and the more value-oriented or underperforming sectors started to work.